So the last video was just layering some new ideas on top of some skills you already had with the retracement drawing. And this is going to be the same. As we take a look at the extension tool and we kind of roll into the idea of confluence, I just want to expand your thinking just a little bit with some of these tools that you're already using. So let's take a look at this extension tool. In this particular case, we've got Amazon on the screen, and we've got our little 1, 2, 3 clicks, or if you'll notice, my stars all have points that correspond with a Fibonacci number. So we got a 5-pointed star, an 8-pointed star, and a 13-pointed star. That was for your benefit. And you can see that we clicked once, we clicked a second time, we measured this range, we pick it up, we drop it over here right on my 18-point Fibonacci star, and we get a nice little bounce off from the 1.618 extension. So that means, as you're already familiar with, this is 161.8% of that original move. Make sense? Now what's cool is we can combine this with the information you just learned in the last video and draw some retracements as well. Let's go ahead and draw a retracement from here on back to the beginning of this range right there. Everything looks pretty good. 50% lines going through a strong move, couple strong moves, actually a gap right there as well. Everything looks great, and we use the additive and multiplicative properties of the retracement tool to subdivide. We get a nice, beautiful little subdivision right here. And when we layer over that, the extension tool, we notice something interesting. We notice that these ratios start to line up, and we get confluence. So as we learned in class number 2, confluence is where multiple Fibonacci ranges overlap. And you may have thought that it could only be ranges in one particular tool. But the truth is, we can use different tools. In fact, I almost prefer to use different tools because when we're measuring different things and they start to line up, we can be really, really confident that we've got a good framework showing up. And so in this particular case, the retracement tool and the extension tool all overlap to give us a confluence right here at whatever that price was, about 158 it looks like. We've highlighted that with an orange line. And then we answer our 2 questions. Where should the market be trading and where should it not be trading? It should be trading down into confluence and bounce. And it shouldn't be that sloppy. There's really no yellow, or one might say gray area here. If we start getting much below confluence, that's a no-go. That's a problem. And so we use this tool for a couple advantages, right? Number 1 is seeing the bounce off confluence helps us know where to get into the trade. And number 2, I would come down here and start drawing my stops somewhere kind of in that yellow zone, or certainly just below it. And this red zone or yellow zone was formed as a result of our Fibonacci retracements right here in the subdivision. That was the green subdivided lines there. And so that's going to help us mitigate our risk. We know exactly where we want to get into this thing, and we know exactly where we want to get stopped out of this thing. And then, of course, we had a nice move. Let's take a look at one more here. This is our traditional confluence using Apple. We already talked about this in class 2. We'll just run through it quickly for review's sake. We're going to put some Fibonacci retracements on here. You should be getting pretty good at this by now. We're using this nice strong move here. There's a 50% line going through that long move in the middle, and then we've got a gap to start things off. We start drawing some additional ranges. There's a second one pulling on back to this little white candle, and then lastly, the third range right there measuring to the gap. We've got confluence showing up here in orange, and we can see that we played out beautifully. We came down and we bounced off from confluence. We'd put our stop just below that red box. And you can get that red box by using the smallest Fibonacci retracement zone. All right, so you want to make sure that you stay certainly within that zone. Or you can kind of eyeball it a little bit with confluence. And we just say, just below confluence about there is probably going to be good. Just give it a little bit of space so you don't get wicked out, and make sure that you're waiting for the confirmed bounce off from confluence to get in. So we could have jumped into this trade right in here. That would have been fine. And certainly this candle right here would have been a good entry to, it would have been a good opportunity to get into the trade with a bounce off from confluence. So now you've got a couple tools at your disposal to discover trade entries and to discover where you should get stopped out of trades. The third element that's missing in our trading plan is where we're going to take our profit off the table. And so I think this is enough for this video right here. Let's take a quick break and then come back, and we're going to talk all about taking your profits off the table using profit targeting methods. So I'll see you back here in video number 3.